Today, let's talk about when to look for shorts and when to look for longs and how to decide what to do when we are staring at the chart in real time. As you already know, price likes to move towards specific levels on the chart. This can be things like the institutional liquidity, the previous day's high, or maybe equal highs or lows that act as clear liquidity levels. But just knowing those levels exist is not enough to actually take a trade. You should always look at the inner structure of the market to understand the current direction and momentum. For example, in this chart, at a certain point, the inner structure is clearly bullish and pushing towards the previous day's high point. The next question you should ask yourself is simple. Should you be looking to short this move? Or should you be looking to long this move? The logical answer is to always follow the inner structure and trade in the direction it is showing you. So in this case, taking a long position makes the most sense because the structure is bullish. But what happens once price reaches and hunts that institutional level? What should we be thinking about that point? We still need to look for additional clues from the price action before making another decision. For example, is the price getting rejected from that level? Maybe forming something like a swing failure pattern. Another important thing to check is whether the structure has changed and the inner trend has now turned bearish. If the momentum shifts and the inner structure flips to bearish, then taking a short and following that new momentum becomes the better idea now. So basically, this is how you read the clues the market is giving you and use them to guide your trading decisions. Let's take a look at this specific example at Bitcoin that happened just a couple of days ago. What you will notice here is that we had the previous day's high, combined with equal highs sitting above it, and a very clear price action. If you look at the internal structure, it keeps making new higher highs in the same direction. So, what should I be doing here? The logical idea would be to follow the current move in that direction and look for a long trade here. But what happens next? Maybe the trend continues and the previous day's high turns into a support for even more long positions. We do not know that. But in this case, price actually rejects the previous day's high level with a swing failure pattern. Then we see the internal structure shift that starts turning the bearish. So in the end, it makes more sense to look for short positions rather than trying to force longs here. You see, this is how we combine small clues together using liquidity, structure, and some imbalances to make smart trading decisions. So, if you are looking at any charts right now, should you be looking for the longs or should you be looking for the shorts? When it comes to longs, if you notice that the internal trend structure is clearly bullish, that is usually really a strong clue. Then you want to ask yourself, is the price moving towards a major liquidity like the previous week's high or set of equal highs? Then another small clue is when the imbalances are bullish and actually supporting the overall trend in the direction. That's basically how you should be looking and thinking about long trades in the market. Now, what about looking for the shorts instead? Okay, let's say price has reached a major level and that area is now being respected. Then you need to ask this, is the price is getting heavily rejected at that level with a large wicks or even swing failure patterns forming? But even that alone is not enough to jump into a short trade yet, because the trend could continue pushing higher and higher for a long time and we just do not know that yet. What you really need to do next is look for a change in the internal trend structure. If the internal trend turns bearish and starts making new lower lows, that is an important shift. And that's when it becomes a much better time to start looking for short opportunities. So, these are the small clues that you want to pay attention to before trading any asset on the market. Okay, folks, have a great and lovely day. Please stay safe and see you soon. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free TradingView indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.